Okay, let me tell you about the most embarrassing moment of my senior year of high school. I was 18 years old and I had just gotten my very first credit card in the mail. It was a butterfly credit card. Yes, butterflies. I didn't even like butterflies that much, but the idea of having that little plastic card made me feel so adult. So, about a month in at school, it's lunch, pizza day, one slice. I walk up to the register, pull out my butterfly card like I own the place, and it gets declined for one slice of pizza. And I'm standing there at the pizza place 1 month before graduation, basically a whole adult, completely confused because in my mind, I thought the balance just reset every month, like a phone plan, like the credit card fairy came on the first and gave me a fresh start. I genuinely did not know I was supposed to pay it back in full each month. I had no idea what interest was. Nobody told me, and the credit card company certainly wasn't rushing to explain it. That was, to say the least, very embarrassing. But here's the part I don't usually tell people. That wasn't even the worst of it. It would be years before I actually understood how credit cards worked. Years of minimum payments, years of balances that somehow kept growing, even though I was paying every month. I mean, I was definitely putting things on those cards. And years of stress I didn't have to go through all through college and all of my early adult life. So when a parent reached out recently with one of the questions of the week, saying that their 21-year-old son just got their first credit card and was afraid that they were going to put themselves into debt, I felt that deep in my chest because I was that kid. So this video is for every parent like her that asked, and if you are that 21-year-old, pull up a chair because I'm about to save you from being like the other 40% of people your age that are currently in credit card debt. Here's the thing that nobody explains when they hand you that credit card. It is not free money. It is not your money. It is a loan, a short-term loan. Every single time you swipe, the credit card company is saying, we'll pay for this right now, and you pay us back at the end of the month. That's it. That's the whole deal. Super simple, right? Except, and here's where it gets sneaky. If you don't pay the whole thing back, they start charging you interest. And that interest is not small. We're talking 20, 25%, sometimes 30% or higher. So let's say your son puts $500 on his card this month. Cool. If he pays back the whole $500 by the due date, zero interest, free to use, great tool. But if he only pays the minimum, which might be $25, that's $500 growing, and it keeps growing. And suddenly he's paying $700 for something that costs $500. That's not a deal. That's a trap. You know this, but he has yet to learn this. This is the thing the butterfly credit card and me did not understand at all. And I paid for it literally for years. All right, I'm going to now give you the 4 rules I wish someone had taped to my butterfly credit card. If your son follows these 4 things, he's going to be fine. Better than fine, actually. Rule number 1, only charge when you already have your bank account. I know that it sounds obvious. It is not obvious when you're 21 and you want something and your credit card works. The rule is, before you swipe, check your bank account. Does that money exist? Yes? Okay, swipe away. No? Put your credit card down. Treat the credit card like a debit card with perks. That's it. Rule number 2, pay the full balance every single month, not the minimum. The full amount. The minimum payment is designed to keep you in debt longer. That's not me being dramatic. That's literally how it works. The minimum is the credit card company's favorite number. Your number is 0, pay it down to 0. Rule number 3, set up auto pay, like right this second, today. Life gets busy, you forget, you miss a due date, your credit score takes a hit, and you might get charged a late fee on top of the interest. Auto pay to pay the statement balance in full, and it eliminates that risk entirely. Set it and don't stress about it. And rule number 4, keep your balance under 30% of your credit limit. If you have a $1,000 credit limit, $300. This one is about your credit score. Credit bureaus look at something called credit utilization. Basically, how much of your available credit you're using. If your limit is $1,000, try to keep your balance under that $300. Under 10% is even better if you can manage it. Your credit score is going to matter more than you think in the next few years. It will affect whether you can rent an apartment, what rate you get on your car loan, even some job applications. Protect it now. I want to be honest with you for a second because I think that this matters. That pizza story, that was embarrassing, but wasn't the worst of it. The truth is, as I mentioned, it took me years after that moment before I actually understood how credit cards worked. Years. And in that time, I got in way over my head. I was making minimum payments, carrying balances, not really understanding why my debt kept growing even when I was paying these credit cards every single month. Nobody sat me down, nobody explained the interest, nobody showed me what compounding actually looks like on a credit card statement. I learned the hard way over a long time with real money, and it even delayed big financial moves like buying a house. And I don't want that for you or anybody watching right now. So let me walk you through the most common traps because they're not always obvious. Trap number 1 is treat the limit like it's your money. If the card gives you a $2,000 limit, that is not $2,000 you have. I made that mistake. This is $2,000 you can borrow. Big difference. The mistake is spending up to the limit and then thinking about later, how am I going to pay that back? Trap number 2 is minimum payments feel fine until they don't. When you're making minimum payments every month, nothing feels wrong. The account's current, no late fees, no red flags, but the balance is barely moving, or in some cases growing because interest gets added faster than you're paying it down. It's a slow leak, but a painful one. Trap number 3 is opening multiple credit cards at once. Getting your first credit card is exciting. It was exciting for me at 18. Then you get an offer for another one with even better rewards, and another one, and suddenly you have 4 credit cards with 4 balances, and you have no idea where you stand. Start with one. If you master one credit card and using it well, then, only then, consider expanding. And trap number 4, not reading your statements. Your credit card statement is not scary. It tells you your balance, your due date, and, this is important, how long it will take you to pay off if you only make minimum payments. The credit card companies are legally required to show you that. Read it every month. Trap number 5, using the card for things that you can't afford. A concert ticket that's a little bit overpriced, you don't have the money for. A vacation, clothes. It's so easy to rationalize when you swipe that credit card, but if the money doesn't exist in your account to cover it, you're borrowing, let's say at 25% interest to buy it. At that point, that concert ticket just got a lot more expensive. Okay, this is to parents. I see you. Your child is now a full-grown adult and has this shiny new plastic. They wield this incredible power. This great tool, if used properly, can have some perks, but if used incorrectly, can destroy their financial life, and now you're lying awake wondering if they know what they're doing. And here's what I want you to know. The worry is valid, and so is the solution. You can actually help, and here's what I would suggest on how you do that. Have the conversation with numbers. Don't say, be careful. Pull up a credit card interest calculator. There are free ones everywhere online. Plug in a real number like $500 and show them what happens if they only pay the minimum using their interest rate with a minimum payment. Let the math do the talking. Numbers are less preachy than warnings. Walk through what everything means. The statement balance, the minimum due, the due date, the interest rate, not to check up on them, just to demystify for him. One time is usually enough. And then you can check in, not up. There's a difference between checking in and checking up. Checking in sounds more like, hey, how's the card going? Figuring it out okay? Checking up sounds like surveillance. Normalize talking about money. Here's the real long game. Make money a topic you can actually discuss in your family. A lot of young adults are making financial mistakes in silence because they're actually embarrassed or because money was never talked about growing up. You can change that. So if you hadn't talked about it in the past, you should start now. I'm so determined not to let someone I love go through what I went through that when my niece got her first credit card at 18, I sat down with her. We went through everything, how interest rates, what utilization means, how auto pay works, what to do if she ever gets in trouble. I wanted her to have the conversation I never had. And I'm telling you, that conversation changes everything. It's not about distrust. It's about giving them a fair shot. And let me tell you, her credit score is impressive a whole 6 years later. I have talked about a lot of things and all the things that can go wrong. Now let me tell you why I actually love credit cards. Because I do. I genuinely do. But it took me a little while to get here. Let me paint you a picture. I am, and people know this, extremely frugal on certain things. Like, it almost offends me to overpay for things. So when I tell you that I have sat in business class more times than not on international flights with a live flat bed and a hot towel and real silverware, I did not pay for that out of pocket. I would never. Maybe if it's really good. I paid for it with points. Credit card points earned by using my credit card for everyday purchases I was going to make anyway. Groceries, gas, subscriptions, paying the balance in full every single month, and then I let those points stack up. That is what a credit card can be when you use it correctly. A travel hack, a cash back machine, a free hotel night, a good credit score that opens doors for you. Let's talk about credit score now. A 21-year-old who gets a credit card today, uses it responsibly, pays it in full every month, and doesn't go crazy with new accounts, in 5 years, they will have a credit history that is genuinely valuable. We're talking a credit score that could get them a lower interest rate on a mortgage, that could be the difference between qualifying for an apartment in a competitive city or not. That could save them tens of thousands of dollars over their lifetime. That Butterfly credit card, had I used it right, could have been the foundation of something great. Instead, it was a lesson, a very public, very embarrassing pizza place lesson. But you don't have to learn it the hard way. That's the whole point. And if you are the 21-year-old watching this, congratulations. You have a tool that, if used right, can genuinely change your financial life. But I need you to hear me. This is real money, real consequences, and real adulting. The card doesn't care how old you are or that nobody taught you. It will charge you interest anyway. So take this seriously, the way you would any other adult responsibility, because that's what you are now, an adult. So act like it. Credit cards are not the villain in this story. Silence is, ignorance is, and we are fixing both of those right now. If this video helped you, share it. Seriously, send it to your kid, send it to your parents, send it to your friend who just got their first credit card, because the more people who understand this stuff will be less people lying awake at night stressed out about interest and instead enjoying those great credit card perks. Real money questions answered honestly, no pretending like I've always had it together.